What's going on, guys? Good morning. Good morning. Man, what a crazy day in the markets. Absolute bloodshed, absolute anarchy, total destruction. That's what a lot of people would have you believe, especially right now with everything that's going on. Obviously, our current president is making things rather very difficult for the markets. We have a lot to cover in today's stream. It was one hell of a news day. Like, there was so much news, and there's still so much news coming out that it's actually hard to really keep up with every little thing. First things first, I was totally wrong and missed, the whole expectation that Trump was actually going to drop those tariffs, or that some deal was going to be made and the tariffs wouldn't happen. So obviously, based on yesterday, or well, today, your guys' time, Eastern Standard, it looks like Trump absolutely went through with everything, and the market reacted the way the market does. And now we had one hell of a day. So we're going to get into all of that and much, much more. I'm also going to be talking about some of the new buys that I made for my portfolio, because even though, yes, it is a red day, there is still a lot of opportunity. So I decided to pick up some additional shares of some picks I already had and open 2 new positions in the portfolio. So I'm really excited to get into all of that and much more in today's stream. So without further ado, guys, let's hop into the portfolio. All right. Hey, PMI, what's up? Manish, what's up, man? We got a lot to cover. Hope you guys enjoy the stream. All right. So buckle in because we got a lot to cover. All right, guys. So this is the portfolio today. 467,000. This value is going to increase because I did take up a lot of margin. So I don't know why especially on Robinhood's app, it doesn't really reflect as much. It doesn't reflect at all, actually, that I took margin. I don't know if that's normal or if I just need to wait for the cash to settle or what. But, it is, this value will be increasing probably tomorrow for sure. G bro, what's up? We have a lot to cover, man, so buckle in. All right, guys, appreciate you guys joining the stream because, again, as always, without you guys, this stream would not be happening. All right, so anyways, this is the portfolio value as it is today, $467,985. We have an annual income of $50,000. All right. March income is expected to be $4,200. Of course, you guys got to take all this with a grain of salt because these can fluctuate. This can fluctuate. Okay. Currently, the portfolio is yielding a 9.89% dividend yield, and the yield on cost is 9.25%. All right, all great numbers. Looks really, really fun. Looks really, really exciting. Again, I'm waiting for the numbers to reflect the new updates, but there was about an additional, on top of the 100,000 that was dropped into this portfolio, there's an additional 70,000 that was dropped into this portfolio. All right. I was hoping for an additional 100, but because of, the way some of these funds work that I purchased, it kind of dropped my margin a bit, which is, a learning lesson for me, but it's nothing that's really gonna put too much of a damper on me. So as we can see, just from this portfolio, 40,000 in annual net income, 3,000 for March, and a dividend yield so far hovering around almost 28%. Okay. For the long-term portfolio, which is what I call the core portfolio now, $372,461. And I hate when it does this. There we go. And dividend yield 2.77%. Net annual income $10,000. March income I'm expecting about $1,200. All right, this is where the REIT portfolio is. This is where the crypto Bitcoin ETF lives, and this is where the tech sector, tech heavy focused ETF VGT is at. All right. So anyways, let's get into the news, and then we'll be talking about some of the new picks that I have for the cover call ETF. All right. Let's wait for this to load real quick. Yeah, so I do have some new picks down here, which I'll be going into very shortly. Okay, so let's look at the fear and greed index because I like looking at this thing. And actually, it ticked up, which was kind of surprising. We're moving into fear away from extreme fear. I feel like we should have definitely been going into extreme fear. But I think with President Trump's, investment conference that he had, I guess not too long ago, your guys' time, he did have a lot of good positive news, specifically regarding TSMC, which is a Taiwan semiconductor company, and they're going to be moving or onshoring chip manufacturing to the United States. And then, Trump also had mentioned a bunch of, other positive news, specifically with, manufacturing, creating jobs, and basically forcing companies to move to the United States to produce, right? To produce whatever their goods are. In that stream, or in that conference, it was mentioned that Honda was also planning on moving their Mexico plant into the United States to avoid those tariffs. So again, when you think you know a lot about tariffs and strategy, you seem to learn something new, because this would also affect Apple. Apple has a massive manufacturing plant in China. And if, now that the tariffs are being implemented, I would assume that Apple products are going to be tariffed as well. So that whole, $500 billion investment Apple is making over these next couple of years is probably going to be due to, onshoring their phones, right? Onshoring their production, onshoring their basically manufacturing. So I don't know that for fact. It's just kind of a guess, but, I could predict, I could probably assume that Apple products are going to go up in price in the next couple of years. But again, the whole idea of tariffs, causing the goods and services to rise, this is also going to force a lot of companies to rethink where they want to do manufacturing, especially if their biggest customer base is in the United States. So I thought that was just rather interesting. So again, looking at the fear and greed index, we could see we're actually a couple basis points higher than what we were late last week. We were like down into, I think, 18, and then it ticked up to 20 on Friday. So now we're at 24. So I don't know. You guys could take this for what it is. Again, you guys can look at this at some point during your day, but yeah, this is just interesting to see. We see volatility was super high over the day. Really high, especially when, Trump was talking about the whole tariffs thing, and then the market just reacted and took a massive poop. I actually should have moved this probably closer to here, but yeah, we'll cover that. Oracle, what's up, man? Hey, welcome back. Thanks for joining. All right, so real quick, Trump and TSMC announced a $100 billion plan to build 5 new U.S. factories. Now, this is not entirely new, and I won't just say this is Trump's doing, because during the Biden administration, there was a lot of talk about making this happen anyways, because there is the threat of China invading Taiwan. And Taiwan is, basically a partner. It has TSMC in Taiwan, and we need those chips. The U.S. needs those chips. So during this conference, Trump mentioned several times how chip manufacturing is strategic to U.S. interests and U.S. national security. So by him mentioning this, we knew this was going to happen at some point. This was mentioned during the Biden administration to have TSMC start building in the United States. It just so happened, I'm guessing, because Trump, during Trump's administration, that he's pushing it a lot quicker to have TSMC move, especially with the threat of China invading Taiwan at some point in the near future, whether that's a couple years or maybe even 5 years out. So this is good because it's obviously going to create new jobs. It's going to create more jobs for U.S. citizens and people in America. So this is obviously viewed as good news. As far as the stock market is concerned, the threat, that was one of the biggest threats. That's why Warren Buffett sold out of TSMC, was because he was worried about the threat of invasion from China. He was taking that into account. So he ended up actually selling a lot of his stake in TSMC. I don't know if he exited it completely, but I remember that was all the rage, all the news for a while, was that Warren Buffett left TSMC. So Taiwanese semiconductor company TSMC plans to make a fresh $100 billion investment in the United States that would involve building 5 additional chip facilities in the country in the coming years, its CEO announced with U.S. President Donald Trump on Monday. Let's see what else we got here. So basically, we must be able to build the chips and semiconductors that we need right here in America, Trump said. It's a matter of national security for us. TSMC said the expansion includes plans for 3 new chip fabrication plants, 2 advanced packaging facilities, and a major R&D center. The $100 billion outlay, which would boost domestic production and make the United States less reliant on semiconductors in Asia, is in addition to an investment announced last April when TSMC said it would expand its planned U.S. investment by $25 billion to $65 and add a 3rd Arizona factory by 2030. So This is all great news, especially in the area of Arizona, because if they're going to be building these factories there or wherever, as far as real estate's concerned, that could be, very lucrative for people investing in Arizona. All right. Basically, the rest is like no timeline. It's going to create 40,000 new jobs, yada, yada, yada. The interesting thing I thought here was about Intel. So Intel is actually going to be assisting with manufacturing some of these chips, which, might save Intel. Who knows? Because Intel's price has been really, really beaten down over these last basically this last year. Intel has been really, really beaten down. Intel is, was one of the Wall Street darlings of yesteryear, right? Intel was all the rage for a while, and now it's not. So this is why single stock exposure is so important, and you have to keep up with your investments. You cannot just set it and forget it, especially with single stocks. If this, was just an ETF, an index fund, whatever, then you wouldn't have to worry as much. But again, when you're investing in individual stocks, you have to keep up with them. Key manufacturing partners to NVIDIA, Qualcomm, AMD, TSMC is central to the U.S. chip industry, and bringing more of its production to U.S. soil would solve major supply chain risks for those firms. Again, threat of invasion, tariffs, who knows what could have happened, right? Especially if you look at Taiwan and where it was located. If we lost, well, maybe not. I was going to say if we lost the Panama Canal, that whole fiasco, that would have probably put a dent in our logistics. But we have, I totally forgot, we have the whole West Coast, and we have Hawaii way out there. So maybe not. But anyways, that is that for the whole TSMC meeting and conference that happened not too long ago. So and during this very same conference, President Trump also was asked about the tariffs, and he said there is no going back. All right, there's no going back. I wish I saved the video. I just finished it not too long ago to get ready for this stream. But basically, he said there is no going back. We're going to move forward with the tariffs. They are going to be implemented. There's no deal that can be made by midnight. So it is what it is. And, we as the American people are just going to have to deal with it. And, Mexico and Canada are also going to have to deal with it. I did not save the links, but there was some articles put out that the United States is training with the Mexican military, and we are having drones fly over the Mexican-American border, right? The Mexican U.S. border. These drones are being flown by, U.S. military personnel, the CIA, etc. And basically we're monitoring and feeding all that intelligence data to the Mexican, military, so they can intervene and, basically bolster, certain areas, and probably take out a lot of the stuff. A lot of the families that are running these cartels, they're moving away from the border, and they're actually going into hiding. So this might have some good positive effects to prevent, the whole fentanyl trade and things like that. What I thought was interesting about all of that, and I'm going on a tangent here, what I thought was interesting about all of that was that would have been a sign that we aren't going to be putting tariffs on Mexico, because they already moved the 10,000 troops to the border, and they're already moving on stopping, all these cartels, and our military is working in conjunction with the Mexican military. So I thought this was definitely going to be a hole-in-one that Trump was going to reverse on Mexico. Canada, there's only like less than 1% of total, fentanyl coming into the United States. Less than 1% came from Canada. So again, what Canada did to respond was, give way more drone technology, order some new drone technology for their, border police. And again, I thought that was it. Like, that's all they needed to do. Like, there's not exactly a lot of Canadians, hopping the border into the United States. So I thought that was a done deal, that Trump was going to reverse course on that. I called that wrong. Is what it is, guys. So I apologize. But yeah, based on all the information I had at the time, I really thought he was going to reverse course. Doesn't look like he is. But he has some very bigly news that's going to be happening, or he's going to be mentioning tomorrow. So we'll see what that bigly news is. One of the biggest pieces that came from this, and I did not save the article. Oh, I did save the article. Here it is. I'll get to that in a second. But yeah, he has some very bigly news coming out. Danos, what's up, man? So NASDAQ plunges more than 2%. S&P Dow drops its fear over Trump's tariff plan sink in. We already covered kind of the whole tariff thing. So yeah, it happened, and the markets reacted. NASDAQ went down. The S&P 500 went down. This one was interesting over the weekend. Okay, over the weekend, there was a note that came out about, the strategic crypto reserve. Okay, Bitcoin's back to where it started after the strategic reserve spike, which we'll be covering in just a second. But essentially, there was this talk of this whole crypto reserve. It's been ongoing for, weeks now. And then now it was like a final launch, like, hey, we are going to do this, and we're going to include Bitcoin. We're going to include Ethereum, XRP, Solana, and ADA. Crypto people rejoice, right? A lot of people were happy to hear this, and a lot of these coins spiked. And then the momentum died, and now they're dropping, and they went back basically to, new lows. So, or they're going to new lows, right? That was crazy to see that happen over the weekend. And it's weird that it happened over the weekend, right? Usually big financial news happens over the workday, right? Monday to Friday. Usually that's when these big news things happen. But I think honestly, it's kind of a conspiracy thought, but for them to mention this over the weekend and then for a pump to happen and then now a dump, I mean, you guys be the judge, right? You guys be the judge of what all that is. I'm sure some people got rich. The people who are in the know, the people who are very close probably got really rich. But yeah, and it was all because of, and then he also mentioned that, Friday is going to be this huge crypto summit. So again, waiting to see what's going to happen. All right. MSTR, I see this note here, MSTR, micro strategy or strategy, whatever you want to call them these days. They have a huge amount of Bitcoin. And, we spoke on this channel about, other companies moving to this adoption of Bitcoin on their balance sheet, adoption of, Bitcoin as, making it part of their treasury, all that stuff. So I wonder what's going to happen with MSTR, and there's a lot of MSTY investors out there, yieldmax is msty investors. I'm very curious how people are how people are reacting to this, because again, over the weekend, a lot of chatter about how msty MSTR is going to go to the moon, and it's recovering. This is a great time to buy. They were right. And now not so much. So again, my heart goes out to a lot of msty investors. Hold the line. I personally have no holdings in msty, and I'm actually not really interested in investing in anything from yieldmax. But again, I'm not here to bash them. Anyone who's holding MSTR, my hat's off to you. Anyone who holds anything like that, where the risk, the volatility is really, really high, especially when it comes to cryptocurrency. I mean, you have my respect, because you need some balls of steel to be holding these things. So moving on. So I remember we covered this on the channel, and this was actually a really, really good, quick little bit, right? We're going on a side quest here. So last week we talked about stagnation. We talked about, the Magnificent Seven having muted returns over this next year, possibly over the next couple of years, because they're such large companies. And the way these large companies have to, drive, return on investment is either by making investments or acquiring, companies, smaller companies that are, able to innovate faster than they can, right? So usually you see this in Microsoft, you see this in Amazon, you see this in Apple, you see these in these larger tech companies where they have to do a lot of M&A activity, merger and acquisitions, in order to stay relevant, in order to keep their edge or maintain their dominance in whatever sector they're working in, or they have to make investments. Like Apple, the whole $100 billion investment, which actually is going to be for them. But they have to make this whole investment in order to get some type of return on it, right? And then that will be reflected, of course, on their balance, shares, etc., right? So they have to do all this stuff. I thought this was an interesting article with an interesting chart. So we know that the S&P 500 and the NASDAQ 100 have large amounts of exposure to the Magnificent Seven. The Magnificent Seven being Google, Amazon, Apple, Meta, Microsoft, NVIDIA, Tesla. All right. So we know that the S&P 500, I think, has like 30%, maybe a little bit more than 30%, and the Nasdaq has like 50%, if I'm not mistaken. I'm sure I am. But if these companies have very muted returns, right, very slow to grow, they're too large now, they're not growing as fast, they're not innovating as fast as they used to, then that's going to put a drag on a lot of returns, and investors are going to have to start looking at other different avenues to drive higher returns than what was traditionally, given over this last decade because of the Mag 7 or because of FANG or because of, all these high flying tech stocks. So this is the chart, which again, I hope you guys can see. I thought this was just really interesting. The 2025 price returns in January and February. The Mag 7 way down here. I hope you guys can see my mouse. Way down here, Mag 7, negative 5.8%. All right. The NASDAQ 100, which honestly should probably be a little bit more, negative 0.6%, right? 6 basis points, right? S&P 500, 1.2%. If we look here at gold has outperformed all asset classes, which is crazy. And then we talked about the S&P 500 equal weighted ETF. You can look up ticker RSP if that's something that might interest you. But you see the Mag 7 just completely getting destroyed, right? Just completely getting destroyed. And you can look at their stock prices year to date for each of those companies, and you'll see that they're not doing so hot right now. So if we do enter this period of stagflation or muted returns from the Mag 7 or the S&P 500, probably has a total return of like 5% for the year, investors should start looking at different ways of getting income. Okay. And some of those different ways can be through, either cover call ETF investing, high dividend yield investing, REITs. There's also just high dividend paying stocks, in order to drive up their returns. I'm not saying that's what you should do. I'm just saying that is probably what a lot of investors are going to look at. They're probably going to flock to gold, right? They're going to probably flock to bonds or something to at least get a better return. Okay. But this also begged another question. Are we heading into a bear market, right? You've been hearing it. I'm sure you've been hearing it and seeing it, probably talking to friends about it, about this bear market, right? Are we heading into a bear market? Okay. Real quick. I just want us to see this real fast, and then I'm gonna go back. So year to date, we're down a couple basis points, not a whole lot, right? Can this go lower? Probably, who knows? But looking at the month, down, 5%, right? 5 basis or 5%. If we look at the definition of what an actual bear market is, a bear market is a prolonged decline in stock prices with major indices falling by 20% or more from their highs. Okay, so just keep that in mind, okay? Because our high was February 19th, right? So that was our highest. And then, we have about another 15% to go if we're really headed for bear territory, right? If we're really, really headed for a bear market. I'm not saying we're going to head there. I'm not saying change your whole investment philosophy. I'm not saying any of that stuff. I'm just saying that a bear market is a prolonged decline in stocks by 20%. Okay. Right now we're at the 5% mark. So we have to kind of see how March is going to be, because I think March is going to be one hell of a bumpy ride. I don't know if and when or how we'll recover, especially the markets will recover. But right now, it's starting to look a little bit like we might be heading into a bear market, especially with the massive declines that we've been seeing. Speaking of massive declines, let's talk about, so far how the stock market's doing. So again, just this last day, we're down almost 2%. And again, like I always mention, the S&P 500, whenever it goes up or down a percent or 2%, like those are big moves. Those are massive moves in the stock market. You're talking some stocks can move up and down as high as 10%, right? Or down as far as 10%, right? So again, whenever you see like a 1.5, almost a 2% drop, yeah, that was a very bloody day for the markets. We look at the NASDAQ tech heavy focused index, down 2.2%. All right, so this is down 2.2%. We look at Bitcoin. This is getting slaughtered, right? Bitcoin is absolutely getting slaughtered. Again, there was all this talk about, this whole crypto reserve, and then it spiked, right? We could see the spike right here. And on Sunday, on Sunday, the weirdest time to announce this thing. And on Sunday, when all the investors are asleep or recovering from their hangovers, not watching, who watches news on Sunday, right? So all this news came out, all the people got in, and then it's just been steadily declining. Look at these sharp declines. Like, people are getting out, people are selling out, right? I would hate to be, Michael Saylor, because I think he made a purchase not too long ago in February, and then there's a steep decline and then another steep decline. So, and he's putting in like hundreds of millions of dollars. So if you ever feel bad about losing, a couple bucks in the market, just know there's probably some bigger players losing a lot more money than you. So take solace in that fact. So how is gold doing? Gold is actually doing really well, like I mentioned in the other chart. And again, year to date, it's the best performing asset class of all assets. Okay, so again, this is telling me market sentiment, is moving towards safer assets, and we can even see that in V and Q, which I'll cover here in a second. But let's take a quick look at the 10-year U.S. Treasury, which again we use as a barometer for mortgage rates and how's the U.S. doing as far as real estate market. Well, real estate just in general, I suppose. Actually, this is new. Japan stocks dropped 2%. Lead declines in Asia as Trump tariffs dent sentiment. Wow, look at that. Just, man, Trump keeps things so interesting. There's never a dull moment with this guy. All right, so let's look at the 10-year Treasury. So again, look, 4.129%. Over the last 3 months, we've been steadily declining. This is great news. This is awesome, awesome news. I'm so excited for this because, again, I have a lot of real estate projects. I'm hoping to get cash out soon or cash out refis. And I'm trying to also sell a property. So hopefully these mortgage rates will continue going down. Hopefully the 10-year will continue going down. And as I mentioned, Scott Bessent, Treasury, Secretary of the Treasury, he and President Trump are focusing on bringing this down. So this is a total welcome sign. All right. So how did V&Q, the real estate index ETF, do? Again, they did pretty well. They ended up, kind of neutral for the day. Actually, they're almost up 0.5%, but really, I mean, I don't know. This looks to me like it was really neutral. But yeah, so far so good, right? Especially with all the doom and gloom out there regarding real estate. You have a lot of people who are saying, that once these tariffs are in place, it's going to be hard to build new homes. When it's harder to build new homes and bring new homes online, then, multifamily, apartments, rents, all that stuff is going to go even higher, right? To buy a house is going to cost even more, right? Because the demand is going to go up because nobody's building anything, right? It's hard to build anything. And this is also going to put a lot of downward pressure on home builders because, again, it's hard to get the material to build anything, especially with interest rates still being relatively high. So this is a quagmire of stuff. You still have, like I mentioned in probably a week or two ago, there's like $1 trillion worth of real estate loans coming due this year. So again, I think this 10-year is going to be a big, big focus for the Secretary of Treasury and, for the current administration. All right, moving on. I just had to read this. Ignore this. We don't really get into politics or geopolitics. But anyways, I have made a new purchase yesterday. We're going to get into the portfolio here in just a moment, but I made a new purchase. So I did a huge deep dive over the weekend on Palantir. Palantir is a company that produces a software that's used primarily by the government and a lot of commercial as well. But they're doing a lot of stuff with AI, with artificial intelligence. And you guys already know that I'm very bullish on AI. That's why I went with VGT. But I'm very bullish on AI. This is going to be probably a single stock, my biggest single stock exposure in my entire portfolio because I believe in Palantir and I believe in the prospects of Palantir. But I did not want to buy Palantir, the actual stock. Okay, real quick, we'll just go through this. I'm going to be doing a video on Palantir and why I'm purchasing the pick that I'm purchasing. But just real quick, all right, Palantir could see more deals. IT Dollars from Washington Wedbush After doing channel checks inside Washington, D.C., Wedbush Securities has added confidence that Palantir Technologies could win additional deals and see an increase in federal spending. Shares rose 2.9% pre-market trading. Based on our conversations, there is a growing view in the 202 area code, basically Washington, that the efficiency focus of the Doge initiatives could be a major coup for the likes of Palantir over the next year, as its unique software value proposition plays perfectly into the broader Beltway theme under the Trump and Musk Doge. Analysts at the firm led by Dan Ives wrote in a note to clients, in turn, we believe Palantir could actually gain more deals and IT budget dollars across various government agencies and ultimately further entrench Palantir in fiscal year 25 and fiscal year 26 federal budget cycles. So I know Palantir dropped dramatically, right? Almost chaotically down, right? Because you had a double-edged sword, a double whammy happen. Basically, it was the defense budget cuts that was announced by Department of Defense Secretary Hegseth, and then also its CEO, Alan Karp or whatever his name is, the CEO for Palantir. He also mentioned that, or it was mentioned that he's looking to sell a lot of his shares right throughout the year. And that just caused Palantir to drop so dramatically. But people forget, and I don't know why this is always the thing. People forget that under the hood, Palantir is an exceptional company with exceptional software and exceptional prospects, right? And they're going to be tied in to so much of the government. People seem to forget this, and then they look at the share price and just stay away from it. With a 30%, with a more than 30% drop, this to me presented a huge opportunity to purchase something that has to do with Palantir, right? Something that has to do with Palantir. If we look at the 1 month from its all-time highs, it's down 33%, okay? This presented a huge opportunity in my opinion, and I ended up, actually purchasing something that's exposed to Palantir as a company, and that is PLTW, right? Which is the Palantir Weekly Pay ETF from Roundhill. You guys know I'm a big fan of Roundhill. I trust Roundhill. I'm actually a little too heavy into Roundhill, actually, because basically my entire cover call ETF portfolio is all Roundhill at this point. Anyways, let's just quickly look at what PLTW is. PLTW seeks to pay weekly distribution to shareholders while targeting enhanced return corresponding to 120% of Palantir's weekly performance. All right. So here's the important thing about this particular ETF. The upside could be super juicy if Palantir share price goes up. If Palantir share price goes down, the returns are going to, or the downward spiral is going to hurt as well, because this is a leveraged 1.2x ETF, meaning that they're putting 1.2x debt on top of whatever the share price of Palantir is. And, as an investor, if you invest into this ETF and Palantir goes down, you're going to feel that pain as well. All right. So this is a very, very, probably my highest risk, highest conviction that I've ever invested into. Aside from, ETFs and, my own individual REITs that I have, this is probably going to be the highest conviction I ever made with a single stock, as far as like a tech focused company is concerned. All right. So why PLTW? Weekly distributions, enhanced exposure. All right, seeks to amplify returns by targeting 120% of Palantir's weekly performance, and yada yada yada. Powerful combination. So here's a really cool thing about Palantir, right? This is just going to amplify the returns of Palantir, right? With income and hopefully price appreciation. I got to put that hopeful there. All right. But this is hopefully going to amplify those returns. I am very bullish on Palantir, and I'm going to make a whole video about why I'm so bullish. But this company is winning contracts left and right. It's so entrenched with the government. When there was this talk about, decreasing the defense budget by 8% over these next couple of years, you look at Palantir, it's tied into so many different sectors. It's tied into so many different departments within the DoD, within the government. It's tied into so many different things. It made a lot of headwind during Trump's first administration, when the whole border thing happened and Palantir was monitoring immigrant families, that's when they really made a lot, like a name for themselves. But again, they're dealing also with Homeland Security, right? Not just the Department of Defense. They're also dealing with Homeland Security. So they have, diversification in their contracts. On top of that, they have a lot of commercial contracts as well, commercial contracts with, companies that I'm sure you've heard of. I can't name all of them at the top of my head, but when I saw them, there was stuff in aerospace, like plane manufacturers. There's stuff in logistics companies. There's a ton of stuff. I wish I brought up, and I'll probably explain it in the next video when I do my deep dive on Palantir, but there was an investor presentation and they put out guidance for fiscal year 25. They're going to be raking in a lot of income, or at least they predict, right? We don't know. It could change on a whim, right? Tomorrow we can just cut the defense budget by 50%, who knows? But because this is an AI specific software based company, I am very bullish on AI. I'm very bullish on tech. So I really think Palantir is positioned perfectly right now to take advantage of what's to come over these next couple of years, right? Am I going to hold PLTW for a long-term hold? Hell no. Hell no, I would not hold this long-term. This is going to be more or less a swing trade for me. I'm going to hold this until I can obviously make, a good amount of return as far as my exit strategy. I'll probably hold this for maybe about 3 months. We'll see how this goes. Again, it's all dependent on how Palantir happens, right? And this all goes back to this, right? We might have to start looking at single stocks for better returns, right? In different strategies for better returns. You could invest in theory. I'm not saying do it. You could invest just in Palantir and just ride it all the way to the top, right? Make new highs, get, all new all-time highs, and then sell out at like $200 a share or something. I don't know, but you could do that in theory, right? For me, I just want that 1.2x exposure to Palantir, right? So I'll be able to make income off of Palantir because Palantir doesn't pay a dividend. So I'll be able to make income off of that, and hopefully I'll be able to capture some of those gains as well. So again, all left to be seen. Guys, we are at minute 37. So we're going to hop into the portfolio real fast, and I'm just going to show you guys some things. I'm going to check the comments real quick and get just a quick sip of coffee because I need it. All right, so Dano says, is there a possibility the tariffs could backfire, could force Mexico and Canada to make deals with other countries? I'm sure there is. It's always a possibility. I'm not too versed in like tariff talk, to be honest, and geopolitics and, trade strategies and things like that when it comes to the international arena. But, just from my level, yeah, Canada and Mexico could go different routes. The reason, it's starting to look like why the United States put tariffs on Mexico and Canada is to basically force companies to onshore, right? Basically move their manufacturing to America. Honda is talking about doing the same, moving their plant from Mexico into the United States. So we'll see what happens. Thinks we're going to go into a bear market. Yep. Smartphones will cost more. Cars will cost more. Everything's going to cost more. Well, that's interesting because if the semiconductors and everything are brought to America, I don't know. I would think it would, well, according to the conference, he was saying that it's better for them to do that so they're not going to get hit with tariffs, which would have made the cost of the good more for us consumers. But by them bringing it and onshoring it here, this could be good, right? This could probably be good. It'll probably lower prices. I don't know, but just a thought. Let's see what else. Senpai, strategies over spreadsheets every day of the week. Oracle says, plty or PLTW, oh boy. Let's see. He also says, bro, this can go to zero. They don't use options, no cover calls. It can be a good play, but the zero thing is iffy. Valid points. Appreciate it, man. I'm very happy to hear that. But yeah, it is definitely one of the higher risk plays. But I am very bullish on Palantir, and I think this can turn around. And of course, there's always talk of like timing it right, buying at the bottom. I don't know when the bottom is. A 30% decline in the share price for me is, that's an opportunity. Could it drop 50%? I'm sure it can, but I think we'll probably have a reversal at some point for this particular company. I just don't know when. I'm very bullish on Palantir. Also, they are the future. They are the Skynet. Absolutely, 100%. I agree with you. I think their software suite is going to be more and more adopted. They're going to be so entrenched in the government, it's going to be hard to get rid of them, just like Lockheed Martin. Lockheed Martin is bigger than the government. The government cannot fire Lockheed Martin from their contracts because Lockheed Martin builds our freaking jets. They build our next generation fighters. They build so many different weapon systems. You cannot get rid of these defense contractors. They are so entrenched in our everyday military life that you can't just get rid of them. So it's crazy. Let's see. Raylan Cormier, summon chat dumb. Okay. XRP stratified reserve. Okay. Not sure what that means. XRP stratified reserve. Expand on that for me. All right, so let's take a look at the portfolio real fast. I'm going to just show you guys the buys, so for full transparency. I don't know why this hasn't updated. Again, I don't like Robinhood as much, but this I thought would have already updated. But you guys can see my buys right here. So I did purchase 618 shares of PLTW, and I did purchase 582 shares of YE. Which is a cover call ETF for Ethereum. I'm not going to cover this on this stream, but we already spoke about PLTW. I also picked up shares of XPay and additional shares of XDTE, which are cover call and 0DTE strategies for the S&P 500. All right. As always, and again, shout out to the Oracle. He's in the chat. He's the one who really talks about this. This right here is so critical. Let me make sure you guys can see this. All right. This right here is probably the most critical thing in this whole portfolio, is having a low risk, a lot of margin buffer to prevent being margin called. Okay. I have dropped, let me see if I can find the buy orders for you guys. Man, I do not like Robinhood. Let's see. Notifications. Okay. So yeah, there's $20,000. All right. So I remember the buys. So there was, 15,000 additional dollars that went into XPay. So 65,000 total, $65,000 for XDTE, $20,000 for PLTW, and $20,000 for YETH. All right. So those were the buys. I don't know why, again, this has not updated. I don't know if it's because of margin thing, but a lot of it was these two are all these purchases, 15, 20, and 20. These were purchased with margin. Okay. Margin is exceptionally dangerous. If you don't know how to use it, it is a loaded gun. Make sure you point it in the right direction. Right. But one of the things that Oracle teaches and that I really, really liked was the fact that you have to make sure this margin buffer is optimal. Okay. You want to be in a low risk status, because if you stack this wrong, if you really stack this wrong and incorrectly, you could be basically pointing the gun at yourself and basically waiting to pull the trigger. All right. So this would have been horrible. This would have already put me in the red, especially with the buys that I just made. So instead, when I did make these initial purchases, all right, I went with XPay and XDTE because they have very low maintenance requirements. Let me see if I can find it. Oh, let's see. There we go. Maintenance requirements, 25%. Okay. I went with two different ETFs. I went with Roundhill's S&P 500 Target 20 XPay, and then Roundhill's XDTE. All right. This also has 25% maintenance. So again, when you start this is called the margin stack, right? You go with the margin stack. You go with the lowest maintenance requirement, high income yielding ETFs that you're comfortable with purchasing. Maybe not the highest yielding, but definitely, something with moderate to high yield dividends, right? Definitely these yields are higher than stocks for sure, and REITs for sure. So you go with these two to create your core portfolio, and then you branch out in a core satellite approach. Then you start looking at the PLTWs, the YETHs, right? Or, any of the other different high yield dividend ETFs that are out there on the market. There's like hundreds of them, but you approach this with a core satellite approach. The core satellite strategy is basically you have your core, right? Let's call it Earth. And then you're going to have a bunch of these little moons all over the place, right? And these are going to be the smaller plays, the momentum players, probably the medium risk plays. Like PLTW, yes, it's high risk, but it's tied to Palantir, and I'm very bullish on Palantir. I would almost consider this probably more of a medium risk. You could go with curve ETFs. I thought about going with curve ETFs. I still may open a position with one of their ETFs, but I just saw that the dip for Ethereum is so deep and the dip for Palantir is so deep that it would be silly not to take advantage of some of these. Of course, just like anything else in life, when I bought these, it continued trending downward. So it is what it is. I'm not, upset about it or anything, but it is what it is. It's part of the game, right? It's part of building wealth. You're going to have days like this. The important thing is not to get emotional. Make sure you stick to an investing plan and make sure you're strategic about your decision making, that you're not just doing it based on emotion. Like I have to double and triple check myself whenever I make these purchases. All right, let's just quickly look at the comments. Strategic Reserve XRP. What do you think about HBAR? I don't do anything with HBAR. Should I use it to buy XRP? All right. This is not a crypto investing channel. I don't really invest in shit coins or altcoins as much. Like I have a little bit of XRP, but this was pretty much purchased on FOMO. I'm not going to lie. But outside of that, the only thing I really invest in is Bitcoin. Even that is in an ETF version. I don't hold it in like some cold storage wallet or some hot storage wallet or anything like that. I don't want to deal with keys. I don't want to deal with all that crap. I just decided to purchase IBIT, which is the iShares Bitcoin Trust, ticker IBIT. So I chose to go with that. But outside of that, I really don't do, the hundreds and hundreds of altcoins and meme coins out there. So I apologize about that. But yeah, this is the portfolio as it is, guys. This is, margin stacking theory or margin stacking concept. Again, I didn't come up with this. This came from Oracle. So is what it is. That's about it, guys. That's going to do it for this stream. I hope you guys found a lot of value in this. So I'm just going to check the chat real quick. Okay, Raylan, XRP is not a shitcoin reserve. Okay. I guess. I mean, I think XRP has some merit over a lot of other coins. Definitely some merit. But again, I'm not going to bet the farm on it. So yeah, I mean, if it's going to be included in this whole, crypto summit, strategic reserve, I guess there has to be some merit to that, right? It's just a data point. It's just an idea. But if the U.S. government is going to be putting money into this thing, then there's got to be some merit behind it. I think XRP, honestly, had probably more utility than a lot of probably hundreds and thousands of other coins out there, because it's been so entrenched in a lot of lawsuits. And again, I don't know the specifics about stuff, but a lot of coins seem to come and go. A lot of projects seem to come and go, but XRP has maintained the same, or the team, the project, and what their ambition is. So I got to give it to at least the team for XRP that, at least as far as utility, and I know they're trying to use their ledger and whatever. I don't know the terminology and all this stuff, but I know that they were trying to use XRP tokens for bank transfers, right? To eliminate ACH, which honestly would be great because I was waiting almost a week for my ACH transfers to clear on Robinhood from my bank. So, I mean, if it could have been done in XRP and based on their white paper, it made sense. I guess the SEC didn't like that or like what they were doing or trading securities here and there, yada, yada, yada. So, yeah. But again, I think XRP probably had the most utility out of some of the other coins. But again, we'll see what happens, right? That's what we got to do, is just take a wait and see approach. Oracle says, thanks for the shout out. And anything other than Bitcoin is a shit coin. End of story. The GOAT has spoken. But all right, guys, we are pretty much at the top of the hour. Like I said, guys, I hope you enjoyed this stream. I have a couple videos coming out this week. I'm going to be working on them today. But they're going to be based around margin. They're going to be based on the Palantir pick. And I'm going to be talking probably a little bit more about this whole concept of high dividend yield investing and how to do it safely. Because again, there's a lot of investors out there, a lot of YouTubers out there, what they do. And I wish this was not real. I wish this was not truly the way they do it. But what I've heard is that they'll literally filter a list of ETFs, right? They'll have a whole list of high yielding ETFs. they'll filter by highest yield, and that will be their buy, right? Regardless of what it is, that is how they buy. I don't know if that's true or not, but I hope not, because that's a horrible way of investing. That's not even investing. The other one is basically people just throw darts at the dartboard and then hope something sticks, right? That's how they view investing in these high dividend cover call ETFs or these, leveraged ETFs or things like that. So I'm learning more and more as the day goes on. Definitely learning more as I do more research into how these work and how to utilize them. I never would have thought for a second you would swing trade a freaking ETF, especially a cover call ETF. But again, and I hate to sound like I'm a fanboy over here, but honestly, Oracle, if you guys aren't following his channel, you guys need to follow his stuff because it is pure gold. Like the stuff is actually very phenomenal and it's based in pure logic. It's not like I'm going to get rich tomorrow, right? We're going to be driving Lambos. We're going to be driving off our mansions off of, we're going to be retiring off. I hate to see these videos where it's like retire off one ETF, right? Like retire off. Like, no, man. Like, come on, let's be realistic here. This thing is never going to always pay 100% distribution rate. I'm not going to mention the ETF, but you guys, I'm sure, could surmise what ETF I'm speaking about. But it's never always going to pay 100%. All right, let's just be realistic. Or else the ETF fund manager is going to be paying out $1 trillion in under 10 years, right? In under 10 years, they'll be paying out $1 trillion in dividends. Like, that is ridiculous. Anyways, guys, let me get off my high horse. All right. What does Bitcoin do waiting? Is Bitcoin faster than stiff? No, about 3 years. Okay. Yeah, Bitcoin honestly is my chosen preferred coin for investing. Ethereum was my second choice. I used to do a 60-40 split between the two. But then I thought that was kind of silly. So then I sold out of Ethereum, moved it on to Bitcoin, and then cashed out of Bitcoin right before the pump, when Trump was elected, and used that money to purchase real estate. So missed it, but it didn't really bother me as much. So it is what it is. So anyways, guys, all right, I'm going to end the stream. Thank you guys for joining. I will see you guys in the next one. Make sure you guys put your comments. All right. I really appreciate reading comments. I really like reading comments. But other than that, guys, I will see you guys. Have a great night, and I'll see you in the next stream. Take care.